Greetings. This is the third class we're calling options class number 2 regarding Tesla options. As you know, in our first class, we sort of gave a general sense of what options are about and that we're looking at trading. We introduced the idea of process A, where there are activities that happen before earnings, after earnings are announced, and then during earnings, and then after earnings, and how stock prices tend to move. Today we sort of follow on with lesson number 2, and I'm going to move quickly through and encourage you to watch a couple of times or ask questions if there's anything that we missed that you're unable to keep up with. And I'll also explain why we ended up with 2 shows today, moving more quickly through the options rather than spreading them out as we usually do in shows that we're doing. So this is Greg for Tesla Fan Insight. Thanks once again for joining us. If this is your first time on our channel, please take time to like and subscribe. Reminder, we're on Patreon. Could use support there if possible. For this class, we're sort of handing and receiving homework assignments on in the message area of Facebook. So we have Tesla Fan Insight on Facebook, and please send me a note there in terms of your email addresses, questions. I'll be able to send you materials as we have them, as well as answer questions about homework, etc. I wanted to note that we're going to cover in the second part of the show what happened to the stock price today, and actually what your homework is, and I wouldn't mind seeing you guys fire answers to this, is how much were the options at the open today that we are looking at, 335 and the 340s, and we want to look at what the returns were, and more importantly, like, why am I trying to get you guys up the learning curve as quickly as possible right now is a big part of the conversation. So what I wanted to introduce as my lesson item today is how options are priced. There are 3 components to the pricing of an option. Number 1 is the stock proximity to the stock price. So if you have an option, for example, at 335 this morning, the stock opened was at 337 and it's closed. So when we bought 335s, we were actually $2 in the money, meaning that the stock was $2 higher than the price we were buying. Now, I want you guys to look at what that price is, because we bought $10,000 worth of that and that number of options. The other option I had you purchase was what's called a 340 call. So if you have a 340 call, you're now in a situation where you're $3 out of the money. And I deliberately chose 2 different options because I wanted you to see what the accelerating value of an option is like if you're out of the money or if you're in the money. So what typically happens is when you're in the money on the call option, which means the 345s will accelerate in value faster than the 350s will. Therefore, one way you can increase the safety of the options trade you're doing is by simply making sure you're buying options on things that are in the money rather than buying options on things that are out of the money. So the kind of lesson from our trading today is, should you be buying options that are in the money or buying options that are out of the money? Because there are different ways to adjust the risk of the option you're trading, and one of them is only to do in the money versus out of the money option. The issue, though, is that the more in the money you have, the more expensive the option is. And so my goal in choosing the options we purchased today was to introduce this concept to you, and then you could look at the rate of returns that you're getting on both of them with the stock price up. So I believe the stock price closes today at approximately 344. The market closes in a half hour, so it may be a little bit lower than that. The apex for the day, I believe, is somewhere around 346 or 347. So one of the question marks that you have to ask yourself is that there are actually some traders who do what are called day trading on options. They'll get into an option at the beginning of the trading day in anticipation of a certain movement of the stock price. And then they will deliberately sell those options at the end of the day to avoid any unknowns that might go on overnight. Now, kind of the question for the day, and I'm going to answer this as part of this process, is, why am I choosing to make sure you get as much information now that you can work with? And the answer is that, remember we talked about process A. For the 2 weeks after earnings have been announced, there are all these activities that occur in terms of analysts coming out with new forecasts for where the stock is going to go. Then we have an additional effect of people trying to buy the stock based on these new calculations. And that's how you can get the stock price moving nicely and you're making money on the options. The other variable that I'm playing with here is that Tesla has a trading range from about 350 to about 380, maybe 390 now. And at about 337, where we were last night, we're kind of in the midpoint of their trading range for the last 8 months. So one of the things that I've noticed is that if you're at the low point of the trading range, like 250, there's a lot of upside there. When you're in that 330, 340 zone, you're almost at the comfort point for the stock. And so with this new burst, we'll see a lot of activities from the mutual funds towards the end of this, into the second week after earnings are announced. So the next 4 or 5 business days, I'm expecting a further 5 to 10 point move on the stock as other analysts come in with positive comments. So I wanted to generally review this with you guys, because that 2-week period right after earnings is a very important period to concentrate your trading. So you're going to have 6 months of trading happen into a 10-day period, because all the analysts have to redo their estimates, and those estimates result in a moving stock price. And therefore, if you want to make money in options without it being crazy unpredictable, one of the ways is to sort of ride the momentum of activities that typically happen around earnings announcement. The other note I should make is note the companies that exceed earnings and how that affects their stock as we work through the 2 weeks afterwards. Note the companies that miss earnings. The super duper companies like Google or Amazon, even though they might have missed slightly, there are a lot of people looking to buy that stock. So it might dip a little bit on that, not so great earnings, but it tends to stabilize and start rising again, unlike other stocks that suffer a great deal more. So there are 3 components to pricing a stock, as we talked about. A is, how close are you to the strike price? Are you at the strike price or above? This can affect the pricing of the option. Number 2, how much time is there? I asked you to purchase the options with your money that expire on November the 16th. Some of you fired back at me with referencing options that expire tomorrow, which is the 2nd of November. Those are very risky because you could lose all your money in 24 hours. So that's why I didn't try to have you guys look at that as an experimental. That's why I wanted to have a full 3 weeks before these expire, so that you could get an understanding of the trading without risking huge amounts of capital in a trade that only happens in 24 hours. The third component on options is something called delta, or how much does the stock price move every day? So if you watch Tesla, particularly around earnings, the stock price is moving sort of up and down anywhere from $8 to $10 a day. So if you kind of hit it right, as we kind of did today, you end up buying the stock at 337. The high for the day ends up being 346, 347. You make 40-50% on your money. And what if you sold out at that point and now you have a 50% gain on what you invested? And that's not a bad deal for a day's work. So there's a certain rhythm to this in terms of how your company is doing. Is it making money? Is it losing money? These are all these questions that kind of lurk in there. So again, reviewing the 3 components of pricing an option: proximity to the strike price, delta, and amount of time there is before it expires. So if you want to be extremely risky and potentially make a lot of money, you could do an option that expires in 1 day. If you want to make money but not be extremely risky, you can take an option that's a month out, 2 months, 3 months, 6 months, a year, 2 years. As you can see, all that extra time you're paying for gives the stock a lot more time to move before it expires, and therefore you don't potentially lose all of your principal capital. So your homework assignment today is a question. Because at the open, and we want to look at what the opening price was for the option today, how much was the 335 call selling for? How much was the 340 call selling for expiring on November 16th of 2018? Then at the close of business today, which is November 1st, what are those options prices? What did they close at? So you can get a sense for what a closing price was. And then I want to know how much money was made on the 10,000 of each that you purchased. So that's kind of the homework assignment for today. And I'd like to have you guys kind of do it and message me back on, or you can send an email if you want, but I really want you to do the homework because you ain't getting nothing out of it if you don't do your homework. And that's the agenda goal, why this works. And then the more times we cycle you through this, the more you'll be like, oh, no brainer, this is too easy. Let's make it harder with other techniques. Now, there's one last thing that you should be aware of, and that is this. One of the reasons we're using options that are out a month, maybe even 2 months would be a good idea, is that the market can tank and suddenly you lose all your money. So one of the things we could have done today is said, hey, I want to not only buy some calls, I could have bought some puts as a way to hedge away the risk of the stock suddenly dropping on us and losing a great deal of money. I didn't do this in this case, and the main reason, sort of there are 3 or 4 reasons, and you guys can see if you think they make sense, and you can just tell me, hey, that was dumb, it was a good idea, whatever you want, I don't care. The goal is for you to learn, and I'm happy to answer. It's my belief that we're in a run on Tesla because of how the earnings announcements are going, and the market was supportive today that we're heading into that 350, 360 range. So my strategy was to just buy calls with some time value, wait them out for a day or two, and then as we go into elections, for example, next week, we may choose to sell those calls, or we may choose to hedge them away with some puts so that the gains that have been achieved aren't totally lost if some craziness happens people weren't expecting during elections. Any rate, so the goal of this was to A, review what happened today on trading. B, the second part of the goal was how much money was made. The third was how options are priced. So if you ever have a question, you're like, man, why did this happen? Why is the option at this price, etc.? And why is it occurring? You know why. The most insane, crazy, will drive you nuts part of options trading is what I'm going to cover in lesson 3, and it relates to how delta can be a pain in the butt. So typically stocks move up, they move down, or they can move sideways. Part of the reason you're choosing a volatile stock is, in essence, you're trading that volatility in terms of how you make money. But one of the problems you can end up with is delta is a legitimate pricing component. And in our next show, we're deliberately going to play with the concept of delta and how the pricing of delta can be maddening in terms of you do everything right, and if you misfire on how you manage delta, you can end up losing a lot of money, even though you made a great decision, trade, etc., etc. So that's our next topic, show, etc., that we're kind of jumping into is delta. Now, please read up on pricing of options. Please read up on delta, time value, and I definitely want you guys to know what in the money and out of the money options are, because all these terms are sort of industry trade terms, and the more times you hear it, it becomes like, you're boring me, too easy, let's make it harder, 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 because the harder it is, the trading situation, the better it is for you to learn out of the situation, which is what the goal is. So, at any rate, I just want to say to everybody that did our trading process today of using your $10,000, congratulations, you made money. I want you to now send me a note. Tell me, how much money did you make? What did you buy at? Where are we sitting right now in terms of price? Do you feel like we should be selling right now as the market closes? Should we hang on to them? we're going to see tomorrow what ends up happening from there. Okie doke. Thank you again for your time. Your trunk is open. Okay, sorry about that. Anyway, I just wanted to note to you that, you know, it's an opportunity to learn, grow, make money. It definitely takes focus, and you got to have like an open mind. Again, you guys need to ask me questions. I'm happy to respond. Been trading a long time. I'm trying to skip fast as I can to give you as much. This is for Tesla Fan Insight. I wanted to thank you. Sorry about the interruption. Tschüss, macht's gut, au revoir, lehitrahout. Don't forget, 20 leg lifts on each leg. Look forward to our next show tomorrow regarding Delta, and look forward to any and all comments. Have a great day, and bye for now.